A sea of red across the Asia-Pacific markets as investors await economic data and rising US Treasury yields pressure indexes. We look at South Africa's economy as the nation votes for leadership amid high unemployment, power cuts and water shortages. And lab-made diamonds are sparkling the luxury market as more customers choose them as an alternative. Hello, I'm Taiba Aydin with the latest business and finance news on TRT World. Asia-Pacific markets saw significant declines as investors brace for upcoming economic data. Japan and South Korea are due to release industrial production figures on Friday, while China will announce official purchasing managers' index for May. Meanwhile, rising US Treasury yields pressured major indexes overnight. Japan's Nikkei 225 led losses in Asia markets, falling by around 1.6%. The broader Topix, South Korea's Kospi and smaller cap Kosdaq all fell. Australia's ASX S&P 200 extended declines from the previous session, falling by 0.4%. Meanwhile, Hong Kong's Hang Seng Index and mainland China's CSI 300 were trading near the flatline. Overnight in the US, all three major indexes experienced declines, pressured by rising Treasury yields. The Dow Jones Industrial Average fell just over 1%, while the S&P 500 dipped 0.74%, marking its first negative session in the past three. The Nasdaq Composite also slipped 0.58%. Oil prices dropped on Thursday as markets awaited the latest US crude oil stockpiles data amid concerns about prolonged high borrowing costs affecting demand. Brent futures fell by 0.1% to $83.52 per barrel. Let's get more on this now with Nadia El-Bilasi. She's a market analyst at Equity Group and joins us from Dubai. Thanks for being with us, Nadia. Now we're seeing markets in Asia, Europe and the US all tumble. What's knocking investor confidence at the moment?
So we're seeing that investor confidence has indeed weakened over the past week, and this is because of the higher for longer narrative that is pressuring the equity markets. Also higher yields because we had an auction for treasuries this week also, and the demand was very little, and that's why it also pressured the equity market, in which case we saw the Nasdaq see its worst performance since the beginning of May. But I believe this is just a correction till we see the PCE inflation figures on Friday that are going to give us a more of a proper signal as to what's the interest rate trajectory that we're heading towards.
Right, that leads me to my next question. Markets are awaiting a key US inflation report on Friday. What are your expectations?
So our expectations is that obviously we've seen a slew of data over the past month that confirmed indeed that inflation is sticky, which is quite the problem for the Fed because we all anticipated that we're going to have 6 rate cuts this year, now leaving us to 1 rate cut expectation or even a hike. A hike is on the table. Fed officials have stated last week that there might be a hike, and that's the main pressure on the equity markets, also pressure on gold. We're seeing a correction in the market, a big correction, just because of higher treasury yields and because of the higher for longer narrative. So I think these two factors are the major players in the market right now that are affecting negatively the risk appetite in the market. But for the PCE and the core PCE, I think market expectations are at 0.3%, and we may actually see that either rise due to summer season where people spend, fly, so that also can increase inflation numbers, or that we can see that it just remains the same, which is sticky at 0.3%.
Right, and oil prices are also negative as markets worry demand will fall if interest rates stay higher for longer, as you mentioned. What can we expect in the second half of this year?
So obviously, oil prices right now are taking a sideways trajectory. If we look on a technical perspective, we're seeing a sideways range. That's also because we have OPEC Plus meeting on June the 2nd on Sunday, and this is like the anticipation and the buildup is also affecting oil prices, but we're still in a very tight range on a sideways trajectory. And I think OPEC Plus, if they continue to cut production by 2.2 million barrels per day, I think that's going to be a good sign for oil prices. But if there's other allies that are going to not continue with the production cuts, and that may negatively affect oil prices.